Every investor and trader knows that you should never ever play the volatility index, also known as the VIX or the FearIndex. So you got to be asking yourself, why did I open up a trade in VXX last week? Barclays play on the short-term VIX index. First, let's talk about what the volatility index is. By the very intuitive name, you might think that because it's measuring volatility, when the market rallies spectacularly, it would increase in value, just like it increases in value when the market sells off spectacularly. However, because of the way the VIX works, it calculates its value based on the next 30 days of options trading. And because the majority of options trading is typically puts because people are buying insurance, they're not worried about the upside as much as the downside, VIX ends up not moving at all when we see huge rallies. It only moves in the downside. Additionally, what makes this asset so difficult to track is it doesn't move in an orderly sell-off. In other words, we could see a 1 to 1.5% sell-off in the S&P 500 in a single day, and the VIX might not even increase that much in value. What you're looking for is a sell-off panic. You're looking for some sort of event that actually causes the VIX to increase dramatically. However, it's not that simple. All the instruments that follow the VIX have to take into account something that's called Contango. Contango happens when an asset is priced cheaper in the future months than it is in the near-time months. This is a very simple explanation, but the long and the short of it is that assets like this will decrease over time. In other words, the VXX will lose between 5 and 10% of its value each month because of the way the deteriorating asset works in advance in Contango. Accordingly, this is not even remotely an investment instrument. In fact, you probably shouldn't even trade this. The reason why I'm playing with the VIX at all is that I'm doing it in my speculation in play account. I'm using a very small allocation, and I think we might see a catalyst between now and the end of the year that could cause a spike in the volatility index. Additionally, if this doesn't work, I think it'll be an interesting story for the channel, which is one of the reasons I'm doing it. Typically, I'm not a trader and I'm just an investor, but in this case, when you're playing with anything related to the VIX, it has to be a trade. The deterioration over time just makes it impossible to hold on to these assets for longer than a trade's length. For me, my catalyst is that we're coming up on the end of the continuing resolution for the budget, and I believe that we might see a spike in the VIX. Additionally, with 2 wars going on overseas right now, there are a lot of possible unknowns that could hit us between now and the end of December. That being said, if we do not see any catalyst that causes the VIX to spike between now and the end of the year, I will sell it before the end of the year at a loss. That's the key. You need to have your whole plan in place for a trade before you get in. It's more important to know your exit point than it is to even know your entry point when it comes to any trade, but particularly one as volatile as this. Now, this should go without saying, but you should never follow anything I do on my channel. These are just what I do in my own investments for you to learn whether or not the strategies I use would work for you. But definitely do not follow me into the VIX. This is a really stupid move on my part, and I have every belief this is going to lose money and not make any. When we saw the big rally in the S&P 500 and the rest of the stock market last week, the VIX pulled back dramatically from its highs. You can see that during the sell-off in the week prior, from that high to the low, we sold off more than 22%. Because of this, I opened a buy in the VXX, which is Barclays play on the VIX for the short term. I bought 22.98% of my allocation at $21.75, which was pretty close to the low on Thursday. From here, I will add to this position in very small quantities, and my next target is $19.96, slightly above the low that it saw just a few months ago. Additionally, because of the VIX being so volatile, it can move so fast in a single day, you have to put your limit orders in advance for both buying and selling. I'll start taking profits if it gets even close to the high that it saw in the last 2 weeks, with my next sell target at $26.74. But I also have sell targets above that are already in place as limit orders, because if we do see a VIX spike, it is possible that it will only last a day.